So in this question, we'll discuss about environmental management accounting. This question was asked in ACCA exam in 2016. So first we'll start with the required. The required is advise how environmental management accounting may help improve the performance of the agrochemical division. So what techniques in EMA will help the company to improve its performance? See, we have already seen this kind of a question in terms of life cycle costing, and that was a numerical question. Here it is just a theoretical question here. So this is not the full question. I have cut short the question here. So only the things which are related to theory, okay, I have it. The numbers I have eliminated. So we'll start from the question here. You can read along. Okay, so when relation to the environment, there is one drawback with the product that is here. The drawback is ALF is effective against pest for a short term only. So that seems to be a drawback. Let's see anything else. Okay, so the product is also the ALF6 will reduce the crop yield in future. So it has a drawback like this also. So to overcome this problem, they are finding out new products. Okay, so to overcome the problem with the ALF6, they are finding out three products. So one is ALF7, other one is red, and one more product is there. There's another product called as green. Okay, so three products are there. First we'll combine all the points. Okay, first we'll get the points, then we will try to write an answer related to the requirement. So you can read the question along with me. Okay, so ALF, the good thing about ALF is, so we can put like plus point or advantage. So the good thing about ALF is requires little amount of R&D. So that's a good thing about it. But it is effective only for 3 years. Okay, and it has one more drawback. So we can put it as pros and cons rather than advantage and disadvantage. Pros and cons, we'll put it like that. It has one more drawback or cons where it might. Okay, so they have not put it as okay. So this is another problem with the product. So we'll move on to the next product, which is red. So let's look at red product. Red is a new type of pesticide which will incur large amount of R&D to expenditure to develop a commercial version. So what is the pros and cons here? So they are starting with the cons. Okay, so requires a large amount of R&D. As it is close. Oh, sorry, I think it was here. In addition, the agrochemical division will have to fund a long-term scientific study into the effect of red on the environment at a cost of 4 million for each of the 15 years that the product will be in use, and for 5 years thereafter. Okay, so there's again one more drawback here. So requires funding for environmental study. Okay, so they require a huge amount of money for that. So that's what is given in this one. For next one is production of red generates large amount of toxic byproduct which must be treated in the division's waste treatment facility. The production plant used to produce red must also be decommissioned for cleaning. Okay, at an estimated cost of 45 million at the end of the life of the product. So it has another drawback. So the drawback is it has two drawbacks here. One is okay, treatment cost for toxic byproduct. So we have to treat it. That is a problem. Then there's also end of life decommissioning cost. Decommissioning cost is that. Okay, so that is also, I think it's significant. So we can put it as significant. Okay, this product doesn't seem to be having any benefit at all. So there's no good things about this. So let's get about the green product, the next product. Okay, so the green is a form of naturally occurring chemical thought to be safe and not to accumulate in the environment. So it has a many good things here. One is it is natural product or natural occurring product. That means it is environmentally safe. Okay, that's a good thing. And is there any other good things here? Yes, it will not accumulate in the environment. So will not accumulate in soil. So is there any other point? See, production of green requires relatively large amounts of energy. So requires a large amount of energy. So that is a drawback here. Then we have significant R&D is also needed to produce an effective version as green remains active in the environment for only a short period of time. Okay, so there's also two drawbacks here we can say. It requires large amount of R&D and effective only for short duration. Okay, it's effective only for short duration. So we'll still read it because we are getting many points from this paragraph. Because of this, green is unsuitable for climates for use in climates where crop production is already difficult. Okay, so it is not suitable. It is not suitable for selected or for few regions. Okay, it's not selectable. It's not suitable. So we got these also. And finally, they tell the Global Food Production Organization is a non-governmental organization which funds new ways to increase global crop production, especially in regions where food for human consumption is already scarce. Okay, so they are trying to fund more food production here. GFPO has agreed to make a significant contribution to the R&D cost of producing a replacement for ALF 6. Okay, so for ALF 6 alternate, they are giving funding also, but will be unwilling to contribute to the R&D cost of for green because it cannot be used in every region. Okay, so that is also a problem here. Cannot get funding for R&D. So that is a problem here. Similarly, a number of governments in countries where Alflonsso has license to operate its chemical business have warned the company of the potential public disapproval should the agrochemical division choose to replace ALF6 with a product unsuitable for use in areas where food production is scarce. So again, there's one more drawback. Okay, might not be welcomed in few regions. Okay, so it has a lot of drawback. So let's get the idea better here. Okay, we have to give a advice using environmental management accounting, how that will help in improving the performance of the agrochemical division, how these environmental management accounting will help in the improvement of the performance of the company. Okay, see, we have a lot of good things and bad things for each of the product, but certain good things and bad things are financially we can, in normal management accounting it is easily captured, certain things will not be captured. Okay, so what we'll do is we will add one more column, we'll add one or two more column. Just one second. Okay, so some of them are captured in financial accounting, so we'll put that also. Captured in financial or in traditional accounting we'll put. Captured in we'll put. Okay, whether it is going to be in financial, in traditional or EMA, we'll then put it. Whether it is traditional or EMA, how it is captured, we'll try to find it out. Okay, so how can EMA help here is, see, it can help in all these ways. One, it can help in to find out the categories of environmental cost. So there are like 4 categories which are available. Conventional cost. So cost having costs which are like shown separately, such as energy and raw material cost. Okay, so these are normally hidden under the headings total cost. So we are pulling it out and we are showing it. That's conventional cost. Contingent cost. So contingent cost is incurred at the end of a life. Okay, something like decommissioning cost. Relationship cost, we have to spend money to have a good relationship with the with the stakeholders in terms of environment. Reputation is reputational cost is the loss of sales due to poor environmental practices. Okay, So we can take these headings and we can have it there. So we'll put it somewhere here. So whenever we want, we'll use them. And let's see in what other ways it could be helpful. So first we'll finish this and then we'll see what other ways it is useful. I think we'll first do that. So it requires little amount of R&D. So this kind of R&D information is usually captured in traditional, right? It's captured in traditional accounting. Right? Traditional accounting is financial accounting and management accounting. Okay. It is effective only for 3 years. See, this will not be captured in traditional accounting because traditional accounting only takes into account like 1 year, 1 year, 1 year. So its effective use and all will be captured only in the uh, in uh, in the total life of its in the total life. Okay, so total life will be like captured in the conventional cost, right? It will be captured in the conventional cost. Might reduce the crop yield in future. Okay, it could reduce. If it reduces, then it will hurt the relationship with the existing people. So relationship cost. So it will hurt the relationship. So we can classify it like this. So we have another product, red. So this requires a large amount of R&D. Again, it is traditional cost will capture it. Traditional accounting will capture it. And requires large amount of funding. See, this funding is not only for the current year, it is also for the current year as well as the future years. So that's what he says. A long-term study of 4 million for 15 years. Okay, that the product will be in use and 5 years after it. So it is something like life cycle costing. Okay, so what will help here is life cycle costing concepts will be helpful. Life cycle costing will be very helpful here. So even here life cycle costing can be helpful. And what else we have? Treatment cost of toxic byproduct. So it is usually hidden under overheads. It should be brought separately as a treatment cost. So that will be captured under the conventional cost in EME. Significant end of life decommissioning. Okay, decommissioning will come under contingent cost or life cycle costing. Okay, so look at how it is getting captured. Okay, that's what our main element is here. Okay, so if it's a naturally occurring product, will it be captured? Yes, we can tell that it is a natural product and our reputation can increase. It can increase. We can also say that it is environmentally safe. I think rather than reputation, it is a very relationship wise, it's a very good product. Will not accumulate in the soil. Okay, so this is again a good thing. So you can put it in the reputation because our long-term reputation is better now. Okay, the long-term reputation with the people would be better now. So you can put it as under reputation cost. Cons requires large amount of energy. So energy is not hidden anywhere. Okay, it should be shown as a split. So conventional cost will help that. So you don't hide the energy cost under some overheads or something. You show it separately. Requires large amount of R&D. So any R&D information would usually be captured in traditional costing. But even though then traditional costing, okay, traditional costing will not usually capture lives, will not capture the R&D. Okay, why is it will capture only what is the expense currently paid. So life cycle costing itself will better capture it. Okay, wherever there is R&D, life cycle costing can better capture it. So you can put that life cycle costing can be a better alternative than traditional accounting. So this also life cycle costing capture. Effective only for short duration. So this is a problem here. Okay, so again life cycle costing will capture that. not suitable for few regions. Okay, so it is not such a great product. Okay, so even if we launch it, uh, people might not welcome it. People might not welcome it. Again, it's a reputational problem it will create. It cannot get a funding here. So I think that is traditional costing. Traditional costing cannot capture it, but there's no other way to classify it, or else we'll just leave, cannot get funding for R&D, or we can just take life cycle costing and we can put it. Might not be welcomed in a, might not be welcomed in few regions. Okay, so the reputation might get damaged. Okay, the reputation can get damaged. Okay, so look at here, we have a lot of cost. These costs will not be captured in traditional costing. Okay, I think none of them are like captured in traditional costing, because traditional costing is all about the current year income, the current year expenses, and the difference between is the profit. That is what it captures. But here we are trying to capture, the cost incurred before the product is produced, after the product is produced, any cost which is hidden under different categories, we are capturing it under various alternatives. Okay, so that's what it helps. So the classification of cost helps in a various ways. Apart from this, what else EMA techniques can be used is, we can use ABC to better identify the drivers of cost. We can help. So we can put it here. EMA accounting. So ABC will help in identifying better cost pool and driver of the costs. Okay, it will be helpful there. And two, life cycle costing. So I think, say, life cycle costing, we have found that it is helpful in captures cost incurred before and after production. After production, it captures that. So it is also a useful technique. And last one is flow cost accounting. So flow cost accounting will help you. One second, we'll just flow cost accounting helps to show the consumption of energy and materials and other resources by explicitly showing them. Okay, so the examples of requirements of large amounts of energy, this point. Okay, or a large amount of a toxic treatment, this points and all will be better captured by, okay, these ideas will be better captured by flow cost accounting. So hope you got a better idea here. So EMA will help this company in a lot of ways. It helps in first classification of the cost. Okay, classification of the cost. So it helps in classification of the cost, and it also helps in applying other techniques such as ABC. You can know the better cost pool and driver. Life cycle costing pre and post production cost it will capture. Flow cost accounting explicitly it shows the expenses and the energy consumption, raw material consumption. It shows separately. So it is much a better technique for the company to improve itself. Okay. So this is an amazing kind of a question. Okay. Hope you guys got a good idea with this question. Uh, this is about environmental management accounting. So we shall end this topic here and we'll move on to a new topic now.